Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So in this video, I'm going to explain you valuation of goodwill. What is the meaning of the term goodwill? What are the features of goodwill? What are the methods of calculating goodwill? So watch the video till the end. Take the screenshot of the points which I've written on the board. Then I'll explain all the points in detail. Now, goodwill. Goodwill is an intangible asset. There are two types of assets, tangible, intangible. Tangible assets are those assets which we can see, which we can touch. Example, machinery, plant, building, furniture. These are tangible assets. Intangible asset is an asset, but we cannot see, we cannot touch, but it is there in the business. It will help the business in increasing the profit. So, goodwill is such intangible asset. Now, goodwill is the reputation or good name of a business. The goodwill is not built, it does not have any physical existence, but the goodwill is created by the reputation, good name of the business. Then goodwill is the benefit or advantage by the good name, reputation, connection of the business. So, simple words we can say goodwill is the reputation or connection or good name which is attached to the business. It's an attractive force. Goodwill is an attractive force which brings in more customers, more sales, more profit. Then it is one thing which distinguishes between the old business and a new business. The goodwill will be there only for an existing business, old business. A new business started does not have any goodwill because it does not have any reputation. Next one is Spicer and Pegler defines goodwill. There are many definitions for the term goodwill. It's simple to understand but difficult to define. We cannot define in a specific word the goodwill. Many different authors have given different definitions to the term goodwill. But the best definition is given by Spicer and Pegler. He says goodwill may be said to be that element arising from the reputation, connection or any advantage. That means goodwill may be said to be an element. It's an element of the business. It's an asset of the business which is on account of reputation, connection or any other advantage possessed by the business which enables it to earn greater profits. That means this element of goodwill will help the business in earning more profit. So when a business is having the goodwill, it will earn more profit. If a business does not have goodwill, its profit will be low. Then normally expected. Then the return normally expected in the capital represented by the net tangible assets employed in the business. That means normally a business will have a certain percentage of return. Example, the pharmaceutical industry, they will say that our return is 30%. That means whatever investment we make in the net tangible assets, 30% is the return, which normally every business will get. But the business which is having goodwill, they will earn more than 30%. So other businesses are earning 30%, but this business which is having goodwill will earn more profits. This is the definition given by Spicer and Pegler. So I have explained you, goodwill is the reputation or good name of the business. Goodwill will bring more profit to the business, right? Now, features of goodwill. The first feature of goodwill is an intangible asset. We cannot see, we cannot touch the goodwill, but it exists. Second, goodwill is incapable of realization separately from the assets. That means goodwill is attached with the business. We cannot separate goodwill and sell it separately. For example, I want to keep my business myself and I want to sell my goodwill to others. It is not possible. The goodwill is attached, inseparable with the business. The value of goodwill has no relationship to any cost which might have been incurred to build it. That means no cost is incurred in order to build the goodwill. But the goodwill will be created by reputation, by good service to the customers, by good name, by connection to a particular business. Like this. So there is no specific cost incurred to build the goodwill. The value of goodwill may be positive or goodwill. If there is a positive goodwill, the business will get more profit than the normal profit. If the business is having negative goodwill, the profit will be lower than the normal profit. Next, the value of goodwill fluctuates from time to time. The goodwill will not remain same always. The goodwill will fluctuate. Sometime it is more goodwill, sometime it will be less goodwill. Then it is not possible to separately value of separately each of the intangible asset contributing to goodwill. Why this goodwill have arisen? What are the reason? We cannot give any specific factors that these are the factors which leads to goodwill. Innumerable factors are there. Then assessment of value of goodwill is highly subjective and differs from value to value. There is no specific method to precisely calculate the value of goodwill. The value of goodwill will differ from person to person because so many methods are there. So valuation of goodwill is a subjective matter. It differs from person to person. Goodwill may be inherent or purchased. Two types of goodwills are there. Goodwill may be inherent. Inherent means self-generated. Self-generated goodwill is called inherent goodwill. And sometimes goodwill will be purchased on acquisition of a business. So this is called purchased goodwill. That's all. These are the features of goodwill. In examination, question will be asked, what is goodwill and what are the features? Just now I have explained. Now, need for value goodwill. When we calculate goodwill, a running business normally will not calculate goodwill. Goodwill will be calculated only under certain circumstances. The first, in case of sole trading concern. In case of sole trading concern, goodwill will be calculated when the business is sold. When the business is being sold, at that time goodwill is calculated. Running business, they will not calculate goodwill. Secondly, partnership. In case of partnership business, when a new partner is admitted, when an existing partner retires, or one of the partner dies, or there is a change in the profit sharing ratio, in these circumstances, there is a need for calculating goodwill. Next, companies. In case of joint stock companies, goodwill is to be calculated at the time of mergers, acquisition, amalgamation, or takeover. These are the situations which needs the value of goodwill. Now, factors affecting the value of goodwill. How to calculate the value of goodwill? Normally, three factors must be considered. First, profits expected to be earned in future. That means goodwill depends on profit. If high profits we are expecting, goodwill will be more. If we expect low profit, goodwill will be less. So goodwill depends on the profit. Second, capital requirement. How much is the capital employed in the business? That is the second factor. Third factor, possibility of transfer of goodwill. What is the possibility that the goodwill will be transferred? These are the factors which must be considered in order to calculate the value of goodwill. Now, methods. Broadly, three methods are there for calculating the value of goodwill: average profit method, super profit method, and capitalization method. Now, average profit method. The simplest method of calculating the value of goodwill is average profit. Take the average profit of last few years. Example, current year. Current year 2022 is going on. So last 3 years, 19, 20, 21. These 3 years profit we calculate and take the average profit. The average profit is multiplied by number of years of purchase. Number of years of purchase means how many years the advantage is expected in future. For example, I am buying your business. So the value of goodwill is 3 years average profit. So I calculate average profit of last 3 years. That will be multiplied by 3. Expecting that in the next 3 years I will get more profit. I will get profit from the business goodwill. So expected profit in future, that is called number of years. And in examination, number of years of purchase will be given. Only the thing is you have to calculate average profit. Simple average. Take the average profit of last 3 years or 5 years, whatever is given in the problem. So average profit into number of years of purchase, this will give you goodwill. And this method is suitable in case of partnership when a partner retires or when a partner dies. First method completed. Second method, very important method, is super profit method. In examination, this problem will be asked on this method. Apart from that, a theory question will also be asked. What is super profit? What is future maintainable profit, etc. Now, the goodwill formula is super profit into number of years of purchase. Number of years of purchase will be given in the problem. That means how many years we can expect the benefit of goodwill from this business. From this business, how many years we can get the advantage. So in the problem, number of years are given. You have to calculate super profit. What do you mean by super profit? Super profit is equal to FMP minus NP. Future maintainable profit, FMP. NP, normal profit. So future maintainable profit minus normal profit, you will get super profit. So how to calculate normal profit? Normal profit is equal to average capital employed into normal rate of return, NRR. So average capital employed into NRR will give you normal profit. And FMP, future maintainable profit, is the past average profit adjusted for future changes. Past average profit adjusted for future changes, that is called FMP. Now steps. In super profit method, what are the steps to be applied to calculate the value of goodwill? First, calculate the capital employed or average capital employed. What is the difference? I'll tell you. So first you find out capital employed or average capital. Secondly, calculate the normal profit. For normal profit, we have the formula average capital employed into NRR, normal rate of return, that will be given in the problem. The return which other businesses are earning in the same industry, that is called normal return. So NRR will be given. So normal profit we got. Find the FMP, the past average profit which is adjusted for future changes, that is FMP. Then calculate super profit. Super profit is equal to FMP minus NP. Once you get super profit, you can calculate goodwill. Goodwill is equal to super profit into number of years of purchase, which will be given in the problem. Only the thing is super profit. Super profit के लिए we need FMP and NP. And NP के लिए average capital employed into NRR. And FMP के लिए past average profit into adjusted for future changes. Now calculation of capital employed. For calculating normal profit, we need capital employed or average capital employed. So how to find out capital employed? All assets. Take all assets from the balance sheet, deduct outside liabilities like sundry, creditors, bills payable, provision for taxation, then bank overdraft, bank loan, all outside liabilities you deduct, will get capital employed. Now note, take all assets except 3 assets. Don't take 3 assets. If in the balance sheet goodwill is given, don't take goodwill. Intangible assets, fictitious assets are given. Intangible or fictitious assets are given. Fictitious assets like preliminary expenses or profit and loss account, debit balance, these are the things which may be given on the asset side. Don't take fictitious assets. And lastly, don't take non-trade investments. The non-trade investments like government securities. So in the balance sheet, except 3 assets, take all assets. The 3 assets, don't take goodwill, don't take any fictitious assets, and don't take non-trade investment like government securities. Take all other assets and deduct outside liability. We'll get capital employed. Now if we need average capital employed, take opening capital employed plus closing capital employed divided by 2. This formula will give you average capital employed. But many problems, opening capital will not be given. Opening capital will not be given. So we cannot apply this formula. In that case, the alternative formula is take the capital, closing capital employed minus half of the profit earned during the year. If in the problem, profit earned during the year is given, take half of the profit. Half of the profit earned during the year, deduct it, will get average capital employed. Now many a times students will get the doubt that when we have to use average capital, when we have to use capital employed. Remember, in the problem, if current year's profit is given, then take half of the current year's profit and find out average capital employed. If in the problem, current year profit is not at all given, profit is not at all given, and opening capital is also not given, so only take capital employed at the end of the year. That's it. Last one, capitalization method. Actually 3 methods are there: average profit, super profit, capitalization. The capitalization method is exactly similar to super profit method. So you apply all the steps for calculating super profit. After calculating super profit, multiply NRR by 100. Normal rate of return divided by 100. This will give you goodwill according to capitalization method. So I have explained the complete concept of goodwill, features of goodwill, methods, etc. This will be very helpful in writing the theory question on this topic. If you want the problems, go to the playlist of my channel. select the subject advanced accounting. In that subject, you will find all the videos of this goodwill on the problems. Inshallah, we'll take up the next topic in the next video.